NQ is a potential, but it's got to open above the line on the next bar, or if it's below, it's got to open with divergence. Watching the GC. All right, bought the NQ, sold the GC. +5 on the NQ. How does he do this so fast, they ask. All right, I bought the YM. Sorry, that was very fast. Didn't have time to say anything. +5. Just knocked out 3 quick winners, and I want to go over those with you now that I have a little bit of time. Sometimes things just happen very quickly around here. Let's talk about this one right here. We had some nice momentum dropping here. You can see this gray candlestick here showing this momentum. We have a speed tick showing that it's very likely that the HFTs are hard at work here. These are the mechanical trades, the manipulations. Now, they typically will manipulate the markets for a particular reason, and that reason is most likely because they're going to try to make price pull back here a little bit. We have an oversold condition. That's this cyan outline. We have a major line of support, and this bar opened above this line. Okay, here's my point of entry, and then went straight to target. Had another one here on the GC. Now, we did not have as much momentum as what I would recommend for most traders. However, when you see this combination here, speed tick with a flash on the open of the next bar, and I had resistance behind the trade, this is a hard trade not to take. This works most of the time. All right, so price ran up. Shows me that the speed of the orders coming in is much faster than retail traders are likely to be able to trade this. When that's the case, that's telling me that this is most likely a mechanical manipulation of some sort, some computer's doing it. When that happens, you got to ask yourself, why does that happen? Why are they manipulating price? So they can make it do this. Okay, that's the reason. Now, we have a hard push up into a line of resistance. We're expecting that resistance is going to at least slow price down a bit. This line had not been touched across at all during this trading session. That's as strong as we can expect that line to be. Then on the open of this bar, we're reading that we have a divergent condition. So we have a strong push in price, yet momentum is shifted in the other direction. Well, when price and momentum get out of sync, we have what's called divergence. When that happens, price will almost always try to catch up with momentum. And that's what happened right here. All right? Very, very important lesson. We also had a speed tick trade here that we took. All right? Same thing. Nice momentum, oversold condition, speed tick. We have this at this point when we came down here, this line had not been touched across. Very strong support. This bar opened just above this line. That's my point of entry. Price bounced up. We're looking for a small pullback. What happens after that? I don't care. So you may notice that we have this little sweet spot here. This is our edge, right in this area. So I have a lot of people saying, well, Tony, why don't you just put a runner on? Why don't you put on a trailing stop and just let it go? My expectation, see this strong downtrend? My expectation is this is going to continue. So just because I have an entry doesn't mean that I think that I have a reversal here. Remember, we trade the pullbacks from a trend. Okay? So we see a trend and then a little pullback, and then a little drop and a little pullback, and a little drop and a little pullback. Drop and a pullback. All right? This happens throughout every trend. There are a series of pullbacks inside every trend, and we are professionals at identifying and anticipating where those pullbacks are going to be. This is what we do. We do it every day, we do it all day long, and we do it better than anybody else in the world.